the math of just pick a number, 500K, 600K. Let's do that math together. Where does that even come from? Well, if you have a base case that the market cap of Bitcoin should roughly equal gold's market cap. Okay, a reasonable assumption. If we say that Bitcoin is digital gold and it plays the role of base money, right? Money, as we know it, is really a small thing. It's gold. And Mark, what do you mean? I use cash. No, that's debt. That's a currency, but it's not money. Money is an asset that exists in the absence of a liability. The only thing in the world that does that for 5,000 years is gold. Now people have, dabbled with other stuff, but ultimately all the other stuff that we think of as money is backed by debt. It's currency. And that's why it ultimately devalues and ultimately inflates away, and why in the history of the world, there have been 775 paper currencies. 3/4 of them no longer exist. I mean, they literally went away. And the same is happening in real time to the dollar, which is why Larry Fink, like not exactly, Joe from some, Twitter handle. We're talking one of the most powerful people in the world, manages, he's in charge of a company that manages close to 10 trillion with a T dollars, said that you should put some money in Bitcoin in my ETF, of course, that will protect you from devaluation of the currency. I mean, he actually said it. And so this is a long answer, Scott, to how do you get to 625?
I mean, that's just 20x market cap from here, right? So gold is 20x our market cap, easy, 600, done.
Exactly. No, that's it. And that's all it is.
Hello and welcome to Money Talks. In today's video, Mark Yusko gives us an update on his current macro thesis and his perspective on current global market conditions, also his prediction for Bitcoin and crypto, and where he thinks the market will go in the next months. So without further ado, let's get started with the video.
Let's round gold to 12, because it probably is, and your 20x is right.
20x.
But here's the thing: half of that gold isn't money; it's jewelry and chalices and gold leaf and stuff that isn't really used as a monetary base. So that half is 6 trillion. That's a 10x from here. Current price of 30, 10x is 300K. Okay. 300K to me is so easy. We don't even have to debate, because the idea of Bitcoin being better than gold as a store of value, as a unit of account, as more portable. Like I say all the time, if I had a bar of gold, which maybe at my other house I do, but if I had a bar of gold and I wanted to break it in half and send you half, I'm not strong enough to break the bar of gold, first of all. Second, I couldn't stuff it in the computer to send to you. I want to send you some Bitcoin. I punch a couple buttons and you got Bitcoin. We're done. So that's a superior store of value and medium of exchange. So I believe Bitcoin gold equivalence is a no-brainer. Now, when? Tomorrow? Next day? I don't really care. Sometime in the future, that's easy. So that's that 300K number.
The potential approval of a Bitcoin ETF by the United States Securities and Exchange Commission, SEC, marks a crucial turning point in the global acceptance of Bitcoin. Among the various applications being reviewed by the SEC, BlackRock's Spot Bitcoin ETF stands out as particularly noteworthy, indicating a significant step by traditional financial institutions into the cryptocurrency market. Analysts such as Seifert have estimated the chances of approval at 50-50, with the issuers having met the SEC's outlined requirements. A groundbreaking development in the approval process is the collaborative application by BlackRock, Nasdaq, and Coinbase. This partnership includes an agreement to share surveillance data, addressing the SEC's concerns about increased oversight. As the cryptocurrency landscape evolves, there is a noticeable shift towards crypto-only exchanges, reducing reliance on stablecoins and the US dollar. with Binance leading the way in trading volume. It's worth noting that the approval of the ARK21 shares Bitcoin ETF takes precedence over other ETFs, including BlackRock's, due to the potential consequences of its denial on subsequent Bitcoin ETF decisions. Steve Fark's analysis also delves into other relevant topics such as the Bitcoin ETF countdown clock, Fidelity's Ethereum ETF, Nasdaq's pause on crypto custody business plans, and the EU's MiCA regulation. This comprehensive outlook provides valuable insights into the evolving regulatory landscape surrounding cryptocurrencies.
And that's a pretty cool thing, because what happens is as the price rises, it attracts attention, right? Movement attracts attention, right? Like if someone, like if my son or daughter were to, move across the frame in the back, I would look, because that's what, we hunters do. And we follow movement. And so what happens every 4 years is we have these seasons. And today we're in crypto summer. Well, what is crypto summer? Summer is the period leading up to the halving, the year before the halving. And what does that mean? Well, that means we drift from below fair value. Okay. Now, why are we below fair value? Well, because we had winter 2 seasons ago that pushes the price down. Well, why does winter happen? Well, because people freak out because of the parabolic top in the previous fall. And then we go through spring, which is kind of the bottoming process. That ended, I think, from June to June. And now we're back in summer. Well, if the Metcalfe's Law model that Tim Peterson, that I use, says fair value is 55K, investors, people who buy things below fair value, that's what an investor's supposed to do, would be accumulating Bitcoin here, right? If the price is 30 and the fair value is 55, you would be a buyer. So as that happens, it slowly accretes toward fair value. When the halving occurs, suddenly the price has to rise a little faster. Well, now that draws in speculators. Well, what are speculators? Speculators are people that don't care about the fair value. They don't care about the price. They just want to make money. So they're drawn to the movement. Well, so in the fall of the cycle, okay, the year following the halving, what you get is increasing velocity and increasing interest. The media comes in, you got lots of clickbait, and suddenly it starts to go parabolic. Well, here's what happened. Toward the end of that cycle, that fall period, you get the leverage. And the leverage is what causes the parabola. And that's true of look what's happening in stocks right now. Why are stocks going like this? Why is NVIDIA going like this? Leverage and short selling and short recovering. That's what it is. There's no chance that NVIDIA is worth, in terms of value, its current price.
I agree.
It's not mathematically possible. It's a great company. They make great products. They're going to sell a lot of chips to people thinking that AI is going to change the world, even though AI is not new. It's a 55-year-old overnight success story. And, we're all not going to be replaced by ChatGPT. I got news for you. But that's not the point. The point is leverage. Margin debt is accelerating again. And so leverage is causing prices to be crazy. So we're in a parabolic blow-off peak in stocks, I believe. And we will have another parabolic blow-off peak kind of late 2024. Halving happens April, May. By the end of that year,
later,
we'll be in the parabolic. And look, in the previous peaks, fair value was X. We got to 2, 3, 4 times.
So what's your price prediction for Bitcoin at the end of 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.